stock staging a big comeback, but the S&P 500 will have to wait at least one more day before perhaps closing at that new high. Here's how we're finishing the day on Wall Street today. The Dow Jones Industrial Average looks like it will settle down 33 points on the trading session. NASDAQ eked out a gain, though, of 4 points on the trading day. And the S&P try as it could. It's like the little engine that could. It's down 0.84 on the trading session at 1562 on the trading day so far anyway. Dow 16,000 by Christmas perhaps? Yep. That's what Landcolt Capital's Todd Schoenberger is calling for. Why such a bullish call, we ask?
I don't know what he's smoking, but I'll have what he's having, as they say. Dow 16,000 by Christmas.
Look at the headwinds that we had today, and you're hearing about a run on deposits right now, guys. Interest rates are just incredibly low right now. There's no other place to go. The headline risk is not there right now, and it's clear that the bull rally is going to continue.
Let's also bring in Greg Ip from The Economist. We had a lot of Fed speak today. We'll hear from Greg, get his thoughts on that. Rick Santelli still with us. And Kenny Polcari from O'Neill Securities finishing up trading. He'll be joining us in just a moment here. So, okay. We got all these headwinds. But we've come so far, so fast.
That's right.
In this market, and you still think there is that much left. We're at 14.5 right now. You'd see another 1,500 points on the Dow.
Absolutely. You're using the logic of saying we've come this far this fast, so we're due for a pullback. And that's what you have other strategists saying. But where's the evidence out there right now, guys? Look, corporate balance sheets are healthy right now. You talk about stock buybacks nearly every day on the set. And then you have to look at everything else that's out there. There's nothing else that's pushing this market down, or it's going to keep it down. And clearly this issue in Cyprus is obviously a non-event.
But Greg Ip, I don't think you think it's a non-event, do you?
No, well, it's very hard to know, Sue, exactly how to price the Cyprus event. The fact that we got a bailout package, even though it was a savagely cruel one to Cyprus itself, and the fact that it preserved the euro meant most of the world sort of said, I'm going to breathe a sigh of relief and move on. What I think people don't appreciate is that if we get into bigger trouble with Spain or Italy later this year, the precedent set by Cyprus means that you get a run on banks way faster and way worse than you would have otherwise. And I think that's a very difficult tail risk for the market to discount.
Todd's shaking his head no.
I hear ifs. I hear a lot of ifs and this and that. I don't hear any evidence that this is actually going to happen. Look, we all know that eventually quantitative easing is going to end, and that will be the death for the bulls right now. But we don't see it anywhere out there. So.
Well, Greg, what about the Fed, though? I mean, that's your area of expertise. You've long had great connections there. A lot of Fed speak today. What do you read in the tea leaves or what they're saying about whether or not they're going to be pulling back on liquidity sooner rather than later?
I think the consistent message, Bill, since we heard from Bernanke last week, is that do not assume it's going to be $85 billion per month and then suddenly we go to zero. They're talking increasingly about moderating the pace. Maybe they go from 85 to 60 or 40, and that will depend on whether labor force growth is as good as it's been. So we've had like 200,000 a month. If we can keep up that pace through the summer period, I think you will start to see the Fed pull back. But some folks at the Fed, like Bill Dudley yesterday, said they actually think that the recent pace of growth probably will not be sustained in the near term.
Bill Dudley, the head of the New York Fed, couldn't that be what derails your 16,000 on the Dow this year, the Fed?
Absolutely, that would be great. But how about this on a twisted part of this, is that now we're talking about unemployment going down to maybe 7.5%, 6.5%. And if that's the case, hey, Greg, guess what? Consumer discretionary is up. The household balance sheet's looking healthy. Look, guys, I just don't see anything out there right now that's going to pull this thing back.
Rick Santelli, one of the issues for people has really been there isn't very many places to put your money, although today we should note that they were definitely putting their money in the bond market, certainly. So maybe that throws a little cold water on that argument.
Well, you know what? I just find it hard to fathom an intelligent investing world where just because there's only one crap game in town means that everybody has to play. You know, listen, at the end of the day, here's some facts, Todd. There's 14 million people on disability that aren't counted as unemployed. There's 22.5 million people that are unemployed. The unemployment rate becomes further and further more of a Memorex than a reality in terms of what it really tells us. And John Calamos, who was on about 40 minutes ago, nailed it in the same conversation I had with Steve Leisman 2 years ago. If rates were higher, it would actually be a good thing. Look at capital as a commodity. If you manage that commodity, you're going to have dislocations. Small businesses, banks, put a little vig into the equation, and it would create a positive dynamic. But no, Greg Ip is an expert on the Fed, but the Fed cannot be an expert at managing this giant mousetrap. And anybody who thinks they can is crazy.
Your facts, Rick, first of all, have not just started. We have been dealing with this for years right now. We know how many people are on the unemployment line, how many people are on welfare.
All these
we know what the numbers are, Rick.
You can talk about the Dow at 30,000. In the end, unemployed people and people in Europe that can't get their money out are going to drown out your optimism on printing presses.
You're going to tell me that if you can't get your deposits out of a Cyprus bank, that's going to bring down the Dow Jones Industrial Average? Give me a break.
Yeah, the Weimar Republic's just a distant memory, and just because the edges of the periphery are starting to dry up means nothing for the big institutions. Europe has a solvency problem. Their banks aren't good, and you can't jiggle around the board and make them better.
Greg, the Fed officials speaking today, really none of them expect the unemployment rate to improve that much anytime soon, do they?
No, they don't. But remember, look, Rick is absolutely right that if you include all the people who aren't looking for work, who basically quit the labor force, the unemployment rate would be higher. But even if you look at those alternative measures of unemployment, they've been coming down. So it's this change at the margin that matters to the Fed. What they talk about is what is the outlook for the labor market? Is it getting better or is it getting worse? Most of them expect it to get better. They want to see proof. They want to see the numbers that it actually is getting better. That means there won't be any discussion of pulling back on quantitative easing for at least another 4 or 5 months. But if the labor market unfolds as they expect, that conversation will be very much on the table by the fourth quarter.
Greg, what did you make of Kachalikola? I can never say his name. Kachalikola comments earlier this morning or this afternoon about the fact that he thinks the Fed needs to be more aggressive. They're not being aggressive enough. He'd like to see that target unemployment rate at 5.5%. Is he just trying to start the conversation around the table at the Fed or not? And how many people do you think on the Fed would agree with his projections?
Coach Lakota is a very interesting guy. A few years ago, you would have called him one of the most hawkish members of the committee, the least sympathetic to taking this aggressive approach.
He had an epiphany somewhere.
Yeah, he has basically completely had a feather change and turned himself into a dove. And he is pushing very hard for a more aggressive approach. I don't think that the rest of the Fed, most especially Ben Bernanke, the chairman, is where he is. But I think he and Charlie Evans at Chicago, who also spoke today, what they're trying to do in some sense is tug the center of gravity in their direction and perhaps offset the influence from more hawkish members who would be otherwise pushing for an earlier end to quantitative easing.
All right, Todd, Mr. Dow 16,000, what's going to take us there? What are you going to invest in here?
Well, I like real estate. I mean, just look at the recent the real estate data. I mean, it looks healthy. I have to say, it's actually in recovery mode. That can only help the household balance sheet, will help sentiment eventually down the road. Obviously, we had the sequestration issue and with the fiscal cliff, but those are in the rearview mirror right now. So I like real estate. I also like oil and gas. I think that's also one of the sectors you want to focus on.
Do we not get a correction in the meantime? Is this straight up to the 16,000?
If we do, it will be a great entry point back into stocks right now. So I think a lot of people that are on the sidelines that are waiting for that entry point, that would be their opportunity, especially if there is a run on the pink, so everybody keeps talking about the Dow falls tomorrow. It'd be a great time to get in.
All right. Kenny Polcari was busy trading. I'm sorry because I know you and he were duking it out on Twitter. I was reading about a half hour ago, and I was waiting to get both of you on television to continue that conversation, but we'll do that another time. Thank you all. Good to see you later.
Thank you.